Good evening, everyone. The U.S. economy is growing. Earnings are coming in strong, and that inspired investors to buy stocks today. Stocks came roaring back on news that the U.S. economy grew at a robust rate of 3.2% in the final 3 months of 2013. It was one of the strongest quarters in 8 years. And the credit goes to solid spending by consumers and businesses and a jump in exports. Another batch of healthy earnings contributed to the rally. Today was the busiest day for earnings, with reports from Dow components like ExxonMobil, Visa, and 3M, along with dozens more. And we'll have more on that in just a moment. But first, let's run down the closing numbers from Wall Street. The Dow rose almost 110 points. The Nasdaq surged 71. That's a gain of nearly 2%, thanks to a 14% jump in Facebook shares. And the S&P was up 20 points.
As Susie said, some good earnings across the board, but a different story for Amazon. After the closing bell, shares of the world's biggest online shopping site plunging initially after a big profit miss. In the fourth quarter, which included the holiday shopping period, the company pulled down 51 cents a share. That was far short of the estimates of 66 cents. Revenue disappointed last quarter, too, just missing forecasts, as you see there. And add to that a weaker outlook for the current quarter, and shares came under pressure right after the report. Sheila Dharmarajan joins us now from the NASDAQ exchange with more on those Amazon numbers. Sheila, what do you see? What's the biggest takeaway?
Yeah, bottom line, Tyler, if you are priced to perfection as Amazon has been, you have got to deliver the results. And if you don't, investors have no problem punishing you. The results are also raising questions about the retail sector in general. Earlier in the year, we heard that bricks and mortars were losing share to Amazon. Amazon perhaps not coming in with the strongest numbers as people were expecting. So a lot of questions now of where those retail sales are going. Are they going to other smaller e-commerce players, or perhaps is the consumer not spending as much as we thought they did?
All right, Sheila, thank you very much. Stick around, though.
Google shares rose as much as 4% in after-hours trading, even though its earnings came in below analyst estimates. The company's core internet search business grew, but it earned $12.01 a share, a rare earnings miss of 20 cents. Revenue was higher and slightly better than forecast, just under $17 billion for the quarter. Now, ahead of the news, shares were up 2.5% in the regular session to $1,135. Once again, let's turn to Sheila Dharmarajan. Sheila, as you looked over these numbers, what was the key takeaway from this earnings report?
Yeah, a key takeaway here is that Google's core business, online advertising, certainly on a roll, but we are starting to see pricing pressure creep in. So the volume of online ads was actually up 31%, but pricing fell 11%. That is certainly not a trend that investors like to see. Now, Google is investing heavily into new businesses. We learned about a little bit more about their Nest acquisition. So investors a little bit on the sidelines about what this all means for Google's future. But again, that trend of volume up, pricing down, not necessarily the greatest news when it comes to Google.
All right. Thanks a lot, Sheila.